All right, everyone, welcome back to another edition of the weekly roundup. I'm your co-host, Mike Ippolito, and I'm joined, as always, by the one and only Tyler Neville. What's going on, Tyler?
I didn't get an adjective.
I
What,
know,
what is an adjective?
I know. I'm sorry, buddy. It's a special introduction because this is a special weekly roundup.
Mhm.
Bittersweet here. We got a little bit of an announcement. Tyler, this is your last episode as the co-host of On the Margin, the weekly roundup. Show's not
Mhm.
going anywhere. We've got no one can replace you. We've got a great new co-host coming next week. But
Yeah.
man, I am gonna miss you, buddy. This has been a ton of fun. So talk to
Sure
us a
have.
little bit. What are you? Tell the audience. What are you going to do?
Well, first off, the co-host you're replacing me with is an upgrade. So number one,
Tyler.
give you guys something to look forward to. And secondly, I am going back into the asset management industry, which I swore I wouldn't do, but this situation was too good to be true. And
Yeah.
it's a guy I admired the way he's ran money for years and years. And his name's Mark Hart from Corriente. Really has been ahead of the game on pretty much every big macro secular turn, you know, for the past 20 years. So excited to really learn from him and really, just do stuff differently. And he was in Bitcoin back in 2015 before Stan Druckenmiller, all these guys. He was thinking differently. So that's where I'm headed. But I will miss this Blockworks crew and these weekly roundups, man.
I know,
But
buddy. We're gonna miss you too. I gotta say that team Corrientes. I've never met Mark. I did watch that interview that he sent to me back in like 2015, 2016. It was like,
oh yeah,
wow, literally everything this guy said came to pass. And I met Worth, who's also at the fun at our Bretton Woods event. What a guy! What? Oh my God! We
yeah.
got to play golf together. There's some good pictures of that. You should look him up on LinkedIn. But I mean, first of all, wickedly smart guy, but also just they seem like great people. So
Oh yeah.
bittersweet for me. We're gonna miss you, buddy, but excited for you too.
Appreciate it, man. Yeah, Worth is something else. That guy's like a walking financial history book,
He
and
is. He is.
really nails like you know all the big geopolitical turns in the market. So looking
I
forward to
think he
learning.
recommended like $4 when we were playing golf. I was like, you gotta text these to me.
Yeah,
I'm not gonna remember all
he
these
reads
books.
like a book a day or something. It's crazy.
It's wild. All right, guys. Let's get into it this week. We got a good final show with Tyler here for you. I'm gonna just share my screen here. All right. Starting off with wages by industry. So we're looking at wages by sector. We're looking at construction, driving, food preparation and service, production, and manufacturing. And basically, you can see everything is just rising. This is just a straight up and to the right chart. It looks like they didn't really put much white collar work here as well, but I would hazard a guess that that would be in the exact same category. What do you make of this, Tyler?
Yeah, this is the capital to labor type transition. It always happens after big, pivotal points like the pandemic. And I think people are realizing, holy crap, this might be here to stay. It's a political issue at this point. I think the cat's out of the bag that, from 1940 to 1980, wages rose like a factor of 13x. And from 1980 to now, it's only gone up like, I think, 200%. So wages are now increasing. It's becoming a political issue, and I think it's probably here to stay.
Yeah, I think this is also a big feather in the cap of the inflationistas out there because kind of the two things that weren't happening right in addition to the money printing was we didn't see velocity of money change and we weren't seeing wage growth. So wage growth is kind of that really needs to happen for there to be secular inflation. So this looks like it's pointing towards something longer term here for sure. At least if this trend keeps up.
And the thing about wages too is like, it can't be transitory inflation on wages. There's something very psychological when wages rise. You can't really pay someone lower. Like that's sort of the whole impetus of the American system. Is like wages don't really go down much.
They can't. I don't. There's a guy, Scott Galloway. He's the host of a co-host of Pivot podcast. I know some of you might know him, and he said this thing that always stuck with me. Is he said it like 2 or 3 years ago in a podcast, but it's far and away easier to fire someone than try to pay them less.
Yeah.
You should never even try. So yeah, that really stuck with me. But
I've seen that firsthand, and it kills corporate culture. Is like when you try to pay someone down, it's like sabotaging the rest of the group.
Yeah, I'm sure. I mean, it's just a psychological thing. Like no one likes to feel like they're making backwards progress. So, I mean, this is locking in a higher cost structure. I agree, Ty. I think this is going to end up being a political issue, but yeah, certainly pointing towards the idea that we could be entering an environment of inflation. This was a really interesting chart. I'm actually not sure where you got this, but you were the one who showed this to me. So, talk to me a little bit about what we're looking at here.
I think I might have saw this in Axios or The Information, but what really struck me was the increase. Basically, how do you address the labor shortage as a corporation and rising wages? Right. And that big chart on the left, increase investment in technology and automation. And I read this article about Jeff Bezos from The Information. Basically, he found this company that could automate, I think, putting packages into boxes, and like it would save so much labor cost. And I was just shocked. He wanted to buy this company, and then the guy who ran the company, I think, said like, well, you're going to annihilate like millions of jobs if you do this. Yeah. And there was this big back and forth. But the point is that we're now at this crazy pivot point in society where you can automate, and UBI is going to become like a real thing at this point, I think, because there was even, who was the company that just bought, it was like a salad company. What was it? What's it called? They just bought an automated like factory line of salad producers. Like that stuff is here now. And because labor costs are probably going to be rising politically, you're going to have to choose. And this shows that like automation is going to be probably the choice.
Yeah, this is really the Jeff Booth argument right here. And you're seeing this backed up by whoever responded to this survey. But yeah, I mean, I guess I when I was kind of thinking about it before, it's like, there's only so much automation you can really do, right, with today's constraints. Like you can't outsource, retail, like floor people or whatever. You still need people walking around like a Banana Republic or whatever, right? You can't outsource that to China. But, like I go to Sweetgreen all the time. There's a bunch of people behind the counter there.
What was it? Yeah.
That was it? Yeah. All right. Well,
I think it was Sweetgreen.
Yes.
They bought like an automated like factory line thing.
Yeah. So it's like, could you automate that? Probably. Or you could at least reduce the labor by half for sure. If there was significant investment in automation. So
kind of scary at the same time. Like what do you do
scary.
Psychologically? And we'll get to the last chart of this was really fascinating, but like psychologically, if people are not working, what they need a purpose. Like are you gonna have rates of inflation that just goes skyrocketing?
That's where I'm not sure, because at the end of the day, I mean, if you look at the middle class that was built in the US, it was built on, there was like the Industrial Revolution, right? And we had all those kind of factories, and manufacturing jobs were key here. And there was never a huge amount of technical know-how that was needed from like floor workers in a factory, right? Like that was basically something that looked like manual labor. The implication here is that we don't want to pay for that anymore. That's commoditized. We have machines now. So, but what? Can you just retrain the entire nation essentially to be computer programmers? Because if you listen to Silicon Valley, right, like that's what they tell you to do. I'm just not sure that's realistic. I'm just not sure. Like I could not, if someone was like, hey, Mike, 80% of jobs now are in a technical field, I'd be like, I don't know what to do. I'm not technical. You see how long it took me to get this PowerPoint working? It just wouldn't work for me. So I'm not really sure what the solution here is. But
you know what? I think the lead is here's a good story. My last fund, the guy was like, we really need you to dig into like programming and like the algos and figure out how to like trade using like algos and be futuristic. I'm like, dude, I'm not going to be programming algorithms. Like, who are you kidding? You know, like I'm so far behind versus the MIT kid, like coming out of college. Like, go hire him. Like, and so that's part of the impetus. I jumped to financial media, but like you have to differentiate in this stuff. So
That's such a funny like manager thing to say. Like, yeah, we need you to pick up algorithms. Like, can you
yeah,
dig into that? Like,
I'm like
yeah,
I
man,
see the
sure.
macro
Let me
really
just figure out
well.
algorithms.
Like I can't program SQL. Sorry, bro.
Yeah, sorry, that's not gonna happen. Yeah,
Yeah.
good luck. All right, so here's another interesting chart. You showed me this one as well. Talk to me about what we have going on here.
Okay, so I've seen this one going around the Twitterverse. Bank of America did a really good one on this, and this shows margin debt actually, falling a little bit, and the 12-month rate of change on the margin debt when that rolls over, that generally signals kind of a top in the S&P if you look back historically. We'll see if this rings true. It's a little bit of a bear porn chart where, you'd think the S&P has impending doom. But I don't know. Maybe it could look like 2014, 2015, where margin debt pulled back a little bit, reset, and then we set out to new highs, right? So that's probably, I think, the most likely analog, but could it also be 2007? We'll see. If the Fed really like reverses course fast, it probably could be, but I doubt that's going to happen.
Yeah, I mean, we'll get into that as well when we talk about the obligatory analysis on Jerome Powell's speech from today. But when you're looking at, I guess my question to you, looking at this, would be timeline of these pullbacks, right? So obviously 2007, 2008, that was a major pullback. We have a name for that pullback, the Great Financial Crisis. So usually when you start to see this pattern emerge, like, does this point to like a 2007 style recession, or could it be a more minor type pullback, or like what should people be expecting?
Yeah, I mean, like, look, when you get to these extremes, 2000, 2007, it's pretty severe pullback. But I just think we might be in a whole new regime.
Regime.
MMT is here. Like, you have 11 trillion of fiscal, an $8 trillion balance sheet. Like, if you have any big hiccup in a generational backdrop where boomers are now like exiting, they need their retirements, pensions need to get paid, they're at 70% funded in the US. Like, I think it's really politically hard to pull that out at this point, unless
Yeah.
like the inflation gets so aggressive on the commodity front where food prices start getting out of hand. That's when I think you really need to tighten, but like I don't think we're there just yet.
I mean, I feel like are shifting more and more bullish these days. Ever since that that Brian Reynolds interview that you did, where do you kind of shake out? I mean, do you subscribe? Are you on this like von Mises crack up boom type argument? Is it the Brian Reynolds? There's going to be a whole new funding. We're in like a whole new early stage
Credit
of
fund.
credit
Yeah.
funding and stuff like that. Like, where do you kind of fall these days?
Yeah, I think I'm more on the bull side just because I thought when the inflation first hit, you would see the fixed income market really sell off, and then the credit spreads would blow out, and we saw it a little bit, and then it just receded. And like the inflation is there, like we have 5% CPI. You would think the fixed income investors would actually like price that in a little bit, but they're not. Like the market based, they're the big fixed income investors that have to match liabilities, the life insurance companies, the pensions. They're so long term that they don't care about the temporary inflation. They're like, well, yeah, CPI is at 5% this year, but I need yield for 20 years out, and I'll buy that bond no matter what because I have to put money to work. So the market based levels of inflation are different from, I think, what's happening on the ground, right? Like you're seeing price rises, you're seeing wage rises, all that stuff. But because there's so much capital and so many promises, the actual like interest rates in high yield and treasuries, they're low. So you have that negative real rate phenomenon going on. And
Right.
they're fine providing it because they're mandated to buy these things. So I think that's the big discrepancy, which makes me bullish on risk assets.
Yeah, I would agree with you. So moving on to this next chart here, I mean, I just think this is interesting. This is something you and I have talked about quite a bit. This chart gets called the culture war capitals of the world, but basically, they're just polling different countries that have the highest share of respondents that see a great or a fair amount of tension between liberals and conservatives. So on this chart, you see South Korea actually at the top. It's South Korea, Chile, U.S. is third. Then it's Argentina, Spain, Brazil, Peru, Mexico. You wouldn't necessarily see, it's kind of, I'm not sure if you've seen that graphic where it's like the list of countries that still have corporal punishment or capital punishment, whichever one is the death penalty. It's like the US, Iran, China, North Korea. It's like not a list that you would necessarily want to be on. I feel like this is a little bit in that same camp. It's like, this is not really a list that we want to be on at all, let alone topping, right?
Yeah. Yeah.
And so I just think it's kind of indicative. I mean, you can see it all around you, right? Like I can't actually remember a time in my life where people are so divided about politics, like can't even see the other side at all. So
You know what? You want to know my theory on this one? I agree with you.
yeah.
It's crazy. It's crazy where we are, but I don't think the gap. I think the gap is closing, and here's why. I watched this thing. It was a small little sports company, and he talked about Rachel Nichols. Do you know Rachel Nichols?
I don't. Is this a
She
sports
basically
thing?
she was an NBA sideline reporter for ESPN, and she made some comments against the woke culture, and basically like she basically had the benefit of woke culture for years and years and years, and then she got annihilated by it, and now they fired her and took her show off the air. And this guy basically said, listen, I treat everybody the same. I don't care if they're black, they're white, Hispanic, Asian, etc. And my growth rates are going through the roof. And all these giant corporations have to play this like weird political game at the top. And I think that's really what you're seeing is like these giant corporations are creating this polarization of society that doesn't really exist. It's just like it's a media brainwashing, I think. And then if you get into the smaller corporations, like say us or someone that's like really growing, it's giving a pretty balanced picture of what real life is. And they're playing on the big media game. They have to play this to get the incremental viewer. And down here, you can actually just concentrate on the topics and the content and try and make it good. So I think these are a little bit, these types of charts, they do show how far things are away from each other in some sense. But like, I think on the ground, if you have time to talk to one another, we're not that far apart in America. It just seems that way because the giant corporations have these crazy incentives.
Yeah.
Makes sense.
It does. I'm like with you. I'm with you somewhat. My take is actually a little bit different, which is just that, yeah, I think the real division here that doesn't necessarily show up as much, but it's the real factor that's causing this perception of like right versus left is wealth disparity. And it's like the 1% versus everyone else. And it actually serves that group of elites that it manifests itself as like Republicans versus Democrats or right versus left. Because I think when people's lives are going well, it's like that thing, I forgot, Michael Jordan or something said, if you're a happy person, you're not on YouTube trolling people, right? Like happy people don't do that. And I think a lot of these people, like a lot of the issues that gets a ton of airtime in the US now, they're important issues, but come on, it's like people, the reason why there's so much emotion behind them, I think, is because people don't feel like their lives are going particularly well. So I feel like it takes on this whole life of its own. So, when I look at this, I mean, I know, I get it. If you listen to the show, like I draw a lot back to that problem, but I think this is a manifestation of that problem. And I would actually look at these countries and be like, how is income disparity or wealth disparity in these countries? And I don't know this, but I would
Yeah.
bet it's probably not great based
I
on this
mean,
list.
yeah, agreed. Yeah.
Yeah. So something to keep an eye on. All right, we got a two for here. We got two charts coming up. There's a shout out to Will Beaumont who pulled these, our researcher here, macro researcher. Number of years worked for median home price. So this is pretty interesting because, I mean, there's not much, it's not that hard to interpret of a chart, right? Back in the 70s, it was like about 3.5 years, right, that you kind of had to work to buy a home. And now we're up to 6.7. Which is almost an all-time high. I guess the all-time high was 2008 when home prices were really soaring there. So, yeah, I mean, it's, again, we've talked about this almost ad nauseum, but I think homes being unaffordable has huge implications on kind of the millennial and younger generations, for sure.
Yeah. Yeah, it
Yeah,
speaks for itself. What's crazy is we're not at 2007 heights yet,
I know,
which,
I know.
you know, if you see like mortgage rates rolling over again, like the amount of people that are going to race to buy houses is just incredible. So,
Well, I mean, I think this chart's actually slightly more interesting. It complements that last one, which is the median age of U.S. home buyers. So it's up from 31 to 47, which just, that feels so old. That's crazy. And even though, I mean, it's funny because you point out that the number of years the number of years you need to work to pay for a median home price, it peaked in 2007, 2008. But since the great financial crisis, the average age of someone, or the median age of someone buying a home, has actually increased by 8 years. Um, so I'm not really sure what to make of that, actually. But
I think I don't know. This would be interesting, but like if you are already a homeowner, you can take out equity to buy another house as the equity in your house goes up, and then you can have a rental property and it pays for itself. It creates this Henry George type market where like every economic growth of the economy goes to homeowners or landowners, where as equity in your house goes up, you can just do this financial engineering thing and basically it creates an oligarchy of people who own assets and then people paying those off. So I think that's sort of what we're seeing here. Like if I'm a boomer and I'm like, well, I could go buy this house or this apartment and then rent it out and have free cash flow. Why wouldn't I do that? You know?
yeah, absolutely. And you know what is funny about this chart too is this chart is really like up and to the right, pretty straight. If you look at the number of years worked for median home price, I mean that's fluctuating, and I would guess that's based on interest rates, right? Because you're kind of bottoming out there in the 1970s when interest rates were going up and up and up. So that was probably impacting the price of homes back then. But this almost looks like a bit of a U, where it's just a very clear trend that people are buying homes at later and later in their lives. So
Yeah. Yeah.
yeah.
Crazy.
All right, central bank QE purchases of bills and bonds in 2020. So we're looking at this as a share of GDP. Again, U.S. is third on this chart, but QE, I guess, looks like about 11% of GDP that we're doing in QE. Not a whole lot to say here, other than that's a huge number. And I know guys like Steve Van Meter and Brent Johnson would say that's not actually money printing. But again, the size of this program is gigantic, right? And we're going to get into Powell's speech in a little bit, and he hinted at tapering later this year, but we're still just talking about colossally large numbers overall.
Yeah. It's really incredible. I mean, this is, what's even more incredible is that the U.S. dollar hasn't rolled over with all this, which just
Yeah,
shows it's a giant confidence game.
As is everything in life, my friend, as is everything in life. Speaking of giant confidence games, last chart for you today. It's not really a chart. Top selling CryptoPunks of the last 30 days. We are still in NFT mania. It's hard for me to open my Twitter because I am not participating in the NFT mania, and I keep seeing all these other people that have made so much money. That it's just like I
Have they
literally
though? I don't know. Have they? I'm curious.
I think they have. Oh, I think this is the make money phase of this whole thing. I mean, I don't think. I mean, it's more.
Like how liquid is CryptoPunk at 5 million bucks? You know,
So I don't think that's liquid at all. I think most of the liquidity is long. You probably heard like the floor price, basically like the there's. I think most of the liquidity is actually concentrated in the cheaper tranches of each of these. I don't even know how you describe like CryptoPunks versus the
yeah.
Penguins versus the Squiggles. Yeah, I think most of the liquidity is not concentrated in the really high ones, but you know,
It's just
um,
I just don't see. This is a little bit out there for me. I'm still gonna like
oh,
NFTs. Great. 10 years from now, probably gonna be amazing. If these people hold on to these and don't sell, I then maybe they'll make money. But like, I have a hard time believing buying a JPEG. I mean,
oh, you sound like such a boomer, dude. You
I,
sound like such a boomer.
I mean, come on.
Listening to you say this is making me more bullish. Okay,
Like
let me give you
the
my.
whole rock thing. Come on, man. Like, give
Oh
me a
no,
break.
Tyler. Oh, buddy. I think you're missing it. I think you're missing it. All right, let me give you my theory about this. So I wrote the newsletter on this
How many buyers
yesterday.
and sellers are in this market? That's what I want to know. Is it
So
millions? Then maybe. If it's like 10,000, that's a liquid market. Price is a liar. Price price is an equilibrium of liquidity, my friend.
all right,
There's no
all right.
liquidity.
Okay. Okay. Let me just give you some perspective here. So in terms of like how you would value something like this, you'd have to be like, how do you value art? Right? And that's like kind of a nebulous thing. People like beauty's in the eye of the beholder, whatever. I think the fundamental driver of art is scarcity and the flex factor, right? It's like, look at how sophisticated I am. I picked this really good piece of art. And look at, I want to show it to you, right? Like, so you can see how much money I have or how good of taste I have or like whatever it is, right? That's like the core driver of it. And then a direct function of that is, well, how many people can I show that to in a way that's not obvious that this is what I'm trying to do, right? So like with traditional art, you only have so many options, right? You can lend it out to a museum if it's like a really nice piece and they'd want it, or you can hang it in your house, right? And how many people go through your house on a yearly basis? Like, I don't know. I'm not that social, not that many people. But like if I have this NFT that I can display online and literally tens or hundreds or thousands of people can see it, it makes sense. It should be more valuable. Like the NFT market should be much larger, in my opinion, than the market for traditional art. So let's start
I
there.
Okay, I completely get all that. I 100% get all that, and agree that if the growth rates keep going, my thing is timing. Right now, the timing I think
Yeah.
is too soon. Like, there's no real metaverse. Like people are talking about metaverse. Blah, blah, blah. I think it's way too
Okay.
soon. It's like
Okay.
kind of talking about autonomous driving. It's waiting for Godot. You're like, you have this autonomous. It's the same thing where it's like, oh, it's really 3 years away, but it's 10 years away.
Okay. I'm with you, but let me give you this theory. So I actually wrote the newsletter on exactly what you're talking about last night, and I want to start pushing this. I'm going to call this
Oh,
the shitcoin liquidity vacuum. All right, so that's what I'm calling
you
this theory.
copyright that?
So let me lay it out for you. Let me lay it out for you here, buddy. All right, so basically, one of my favorite pieces ever in crypto is written by this guy named Eddie Lazarin and Chris Dixon together. It's called the Crypto Price Innovation Cycle, and they just nailed it. It's like basically everything in crypto, all these cycles start with price. So as the price runs up, you start to see more mentions in like media, then that leads to new ideas, then that leads to projects and funding, and that's when it all peaks, and then it all rolls over, and then like so there are these cycles that go for like 4 years. And then it all kind of like dies down and then it all starts up again. That's why VC funding is actually an indication of it being late stage in the cycle. I would add one thing to it. Each cycle has a fundamental innovation that they're predicting the thing that is actually going to work in the next cycle, but they're just too early on it for this cycle. Like they've sniffed out what's interesting and
yes.
all the hot money flows into that thing, but it's the shitty version of it. So like this was ICOs in 2017, right? ICOs and DeFi, very, very similar. The fundamental innovation behind ICOs is a funding mechanism. And it's this idea of ownership and users of the platform being the same thing, that was like groundbreaking stuff. The problem is, in the beginning, everyone just sensed like this is a way to make money fast. And it was shit. And it was fraudulent, mostly. There were some good actors, but a lot of it was really fraudulent. So like all the money goes into that in the 2017 cycle. But then during the next cycle, we're like, okay, we figured out what was bad about that. Now we're actually going to do it and it's going to be good. The problem is, in the next cycle, they've already figured out the next new hot thing, which is NFTs. So it sucks up all the liquidity. This is the crap version of NFTs right now, right? Yeah. It's attracting all the money in this cycle, and then it's going to roll over. And then the next cycle, they're actually going to figure out NFTs, but it's going to be like DAOs, that everyone's just like throwing money into DAOs. Yeah. So it's like the current cycle accurately predicts what's right or what's coming in the next cycle. And it attracts a lot of investment, but it's not ready for prime time. And that is my personal theory about NFTs.
I subscribe to that. I subscribe to that. It's too early. The price is you're too early, which is the same thing as being wrong, right?
It is.
And I'm not saying that they're right now, but a couple months, I don't know. Unless there's so much wealth has been created where they can actually hold. Like if they don't try to sell, but like as soon as you do a down round, like if you think about it like a VC company, if you do a down round on these things and you sell below your price and everything gets marked to that price, that's the price cascade, especially in an illiquid market, that I think we might get at some point.
Yeah.
But maybe I'm wrong. Maybe the money printing will just take off and who gives a shit? We're going to the moon.
So I think the final implication of this theory here is volatility breeds maximalism. That's how you get people that have like die-hard beliefs. Because if you hold an asset, if you buy something and then it goes down 80%, but then it goes up like 10x from your original buy point, you get one lesson drilled into your head, and it's, I am never selling this thing. I've seen this movie before. I didn't sell when it dipped. I held on. It was the right decision. And honestly, this is the reason I think gold has the community that it does. Because when it went off of its little peg, or when Americans were allowed to earn it, like the 70s and 80s, dude, gold did like a 20x. So all these, that's why I think you have this community of gold bugs, because they were like, yeah, I was there, I saw it, like I got the 20x, and like it just bred this like really strong idealism in people.
Yeah.
And I think what happens in crypto is, some group of people clearly, right? When Bitcoin first happened, it was nutty. You had to be insane to buy into that. It was so many good reasons why it wasn't going to work. It was like the longest of all the long shots. So lots of people, they watched it go up, then they watched it go down, and they held through that volatility, and it bred like, this is the answer. This is my freaking answer right here. Then the same thing happened with Ethereum, right? And and people tend to be like one step behind in the innovation cycles, and this is the root, I'm telling you, of all the maximalism in this space. I'm gonna stop pumping my own theories here, but yeah, this is I really think that's what it is.
Tangential story for you on gold. I finally decided to sell my gold coins. So
really,
yeah. So you'll laugh at this. Last week I go to this salty like old gold dealer store. And
old gold dealer store.
I bought these coins in I think it was like 2014 or 2015 on like the big dip. I'm like, okay, I'll buy some, and I think about like $10,000 worth of coins. And now they were worth like $20,000 now, but they were worth like 25 when it hit 2000 or whatever. And so I go to the store. I'm like, gold's not mimicking real rates anymore. Like Jurian Timmer had a great tweet this morning where it basically it's not keeping track with it, and he asked the question, is crypto taking market share, which I think it probably is, honestly. So anyway, decided to sell my gold coins finally, and the guy, it's like this hole in the wall place, and he literally hands me $20,000 in cash, and I'm like, what the hell do I do with this? And it's like two big piles I put in my pockets, and I walk out of there like, is someone gonna rob me?
It's like, you're off the grid, brother. You're off the grid.
strip mall in Texas, and I'm like, my God. But I guess like going back to your point about like this guy is told me I've been doing this for 30 years, and he's like, it's still booming, the actual coin business, the physical coin business. He was like, yeah, it's still booming even though price pulled back a little bit, but he's still in that mentality of like that's probably where he made his big dough, and he's still kind of trading it. So maybe that'll be NFTs in 20 years.
Maybe it will be. Yeah, but
The kicker to that story was I go to Bank of America to deposit the cash, and it was closed because of the Delta variant. And so I sat at the ATM depositing this money through an ATM for like 45 minutes, like looking over my shoulder to make sure that no one was going to attack me. So
that's incredible. Yeah. So yeah, man,
that's the banking system.
I can't actually figure out how to share my screen. I suck with the technology, but like, yeah, if you literally just look up the historical price of gold, and you'll see where it rips in like the 80s, basically, and then back into the age of the average person who advocates for gold, and that's the evidence of this theory.
Yeah,
but
I love that.
Yeah, and there's a whole generation of people in crypto that are being created. Same thing. Howdy, guys. Excited to talk to you a little bit about this week's sponsor, Matrixport. If you're like me, you're trying to figure out how can I make my crypto go as far as it possibly can. Well, Matrixport makes it really easy to do the simple stuff like just buying and trading, and you're holding your crypto on a secure platform that you don't have to worry about. But they also help you take that next step to doing things like getting loans against your crypto or earning yield on it. Let's talk about the yield part, because for me, that earn feature is the most interesting thing that they do. Number one, first step, you can start earning up to 30% APY on your USDC deposits. That's about 29.99% more than if you just kept those funds in a bank account. Talk about a no-brainer. Number two, their team walked me through this. They have made accessing DeFi easy. And guys, I am telling you, I am the biggest Luddite on the face of the earth. If I can understand this stuff, then I promise so can you. So don't wait. At least go check them out. Click the link at the bottom of this episode. Thank me later. All right, let's get into stories of the week here. So I do want to talk about Jerome Powell's address in Jackson Hole this week. So I guess highlights of that is that he did suggest that we would see tapering by end of year at some point. Previously we were kind of getting mixed signals from other Fed governors. So Bullard down in St. Louis has been advocating, it's like, hey, there's more inflation. He's come out and said there's more inflation than we thought we were going to see. It's been time to taper. Other Fed governors have been more reticent. I think this is the first time that Jerome Powell has actually come out and said we do expect to taper by end of year. But it looked like stocks actually reacted pretty positively. Crypto's up as well. What do you make about all this?
Yeah, I think, Jay Powell, everyone was pricing in a taper sooner. They got really nervous. We saw the dollar spike, and Jay Powell he stuck to his guns of, hey, we're waiting for unemployment to drop. He mentions, the rates of unemployment for blacks and Hispanics is up. I think that's saying like, listen, we essentially need to make sure that these people are okay. They're disenfranchised. Service, people have been disenfranchised with this whole pandemic. And if we pull out too soon, then, they're going to get hurt the most. So I think that's his way of kind of saying like, this is good. We're going to make sure things are back to normal before kind of like tapering too soon. And all the expectations built up previously were really, really bearish and hawkish. So yeah, I think that's why we're kind of rallying here today, and the dollar's kind of taking a dip.
Yeah, absolutely. I don't really have much more to add, honestly. Yeah, I think that's a pretty good explanation. I feel almost obligated to cover it, but it seems like it kind of went exactly as folks were expecting, honestly.
Yeah. What's just funny to me is like every single time he speaks, even if he did say we were going to taper, like it's not really going to affect that much. If he said raise rates soon, I feel like that we've already been like pricing this in.
Yeah.
So
I feel like just in general, I mean, it's almost like the programs that we're undertaking from a monetary and fiscal perspective are so extreme. People are starting to like, isn't it just making you wonder at how wild the system that we have is? Like the entire, the aggregate world economies hang on the words of one guy who talks like every month.
yeah,
And if he, if he like appears too nervous or like says the wrong thing, then I mean, shit can sell off. I mean, that's nuts to me. I mean, maybe this is just like
oh,
outsider
no.
perspective and everyone else. It seems ludicrous that this is the system that we have. I mean,
Yeah,
I don't know. I don't
I
know.
agree. It's part of I guess markets in general, but yeah, it's talk about centralization problem. Like this guy has way too much power in some senses.
So, I mean, I guess that really is what when I try to describe Bitcoin to people in general, it's just a different governance mechanism for money. And I'm not a proponent actually of, I don't think we're headed towards a Bitcoin standard, most likely in the safety and a moose kind of sense of it. I think it'll be an important monetary asset. I do still think you need something that looks like fiat to function as a medium of exchange, because you need some amount of like demand, elasticity to fit the needs of the economy. But like if you just look at how the governance structure behind money creation works today, it's clearly broken. I mean, I don't really know how you'd look at it and be like, yeah, this is functioning as intended. Like
What's
no
crazy?
problems with this system.
I agree. And what's crazy to me is textbooks need to be rewritten. Like it's a political tool at this point. It's
I
not.
agree.
So there's entire majors, and you pay $200,000 a year to go to a school to learn this thing that literally is like kind of obsolete in some ways.
I'm surprised there wasn't a massive just rethinking or rewriting of textbooks when rates went negative. That should be
Yeah,
impossible.
right.
That was
I mean,
impossible, right?
owning a negative yielding bond or issuing a negative yielding bond could be theoretically an asset because you're getting paid,
Yeah.
right?
So Tyler, imagine when did negative nominal rates start? Was that post Great Financial Crisis, so like 12 years ago?
No, I think there's been negative nominal rates like in the 40s and stuff. Like real rates, you mean? Negative
Nominal
real rates?
rates.
Oh, nominal
Nom-
rates. Yeah.
yeah.
That was like 2015, 2016, I think, when it first in Europe.
Imagine trying to describe that to someone 20 years ago that there was going to be like $20 trillion worth of
Negative.
negative negative rates in the world.
They would call you crazy.
They would call you nuts and they'd sit you down and be like, "No, you idiot. Don't you understand? Why would anyone ever do that?" That's what they'd ask you. And you'd have to say, "Well, you know,
Oh, you
uh,
put a political system in place with lots of mandates where
yeah, yeah,
you're forced to buy this Austrian bond at a hundred-year Austrian bond.
yeah. It's pretty wild.
It's
Crazy
so
world we're living in."
yeah.
All right, so this next story here. So we already kind of got into this with the NFTs, I guess, but the marketplace OpenSea, they crossed over $1 billion in monthly volume. Again, I guess this goes to your point a little bit about just liquidity in this space in general. If you look at the issuance, like primary issuance of, especially like art and collectible NFTs versus gaming, I mean, there's just like a colossal amount of supply. And like everything about this is screaming kind of local top. Like you can see it all over Twitter, people being like, I'm like pausing work, because this NFT is dropping at this time and I like got to get it as soon as it goes out. So to your point, I'm not arguing with you. I think the liquidity is going to dry up in NFTs, probably. Also, if you just look at, I mean, I think, oh man, I don't want to be wrong about this, but I'm pretty sure like 6 months ago, OpenSea was doing something like 13 million in monthly
Yeah.
volume or something, and now they just crossed a billion. I mean, it kind
That's
of is like these, yeah, that can't be sustainable. That can't be sustainable.
Well, here's where, on the relative bull side, if you're in this world where, like Greg Foss says, monetary fiat is programmed to debase at an exponential rate from here. And you'll have spurts where it's not, but everything becomes a relative value play. And people are like, well, I'm not getting the growth rates I need to keep up with inflation just by, investing in the S&P. And then you go into Bitcoin and that's like, one step higher. And then you go into, staking, and then you go into, yield farming, and then you go to NFTs, and that's like steroids for all this stuff. And the further you go out, the less liquid it is. So I don't know. It makes me a little bit concerned. But if we're just in this world where everything just gets crazier and crazier and crazier, and they can't politically pull it out, maybe that's the new world. I don't know.
I have no idea, man. I do want to correct myself, by the way. So in January of 2021, I just looked this up. OpenSea's volume was 8 million per month. So freaking nuts, man. Yeah, 8 to over a billion in monthly revenue. Yeah, I mean, it's hard to know, right? And it doesn't seem like the dynamic that's been in play for the last 10 or 20 years seems as though it doesn't seem to be reversing yet, right? Like the premium that investors are willing to pay for growth still seems to be there, or at least the appearance of growth. So I can totally understand the perspective of someone like, hey, the very foundations of the monetary system seem to be in question. Like, you'd really like to be in some safe stuff, right? But also at the same time, I can totally see the argument for what we're really lacking here is structural growth. So investors will pay basically anything to get it. So you kind of want to be in these weird things. I think I'm not a huge fan of people saying, hey, we're in this new paradigm right now. Maybe this is just the way it works now. I mean, people need to outline what they mean by that, because if you think that we're moving to a paradigm where nothing matters and prices will go to the ceiling forever, like, I just don't think humanity functions in a world like that. I think you still need rules. I don't think we're abandoning reason here and shifting to a paradigm where nothing makes sense.
And it happened in Weimar Republic.
I know, but do you think we're headed towards a Weimar Republic? No, man, I don't think we are.
I mean, like 11 trillion and 8 trillion. I'm not saying that their prices were doubling every hour or something like that in Germany. I don't think we're there, but like, if we're on the path, I think we're 100% on the path. And like, really going to be fascinating is the next time, like, if we do get the taper and a big pullback in the market happens, politically, what happens? Because if you have someone who's strong at the helm that's like, no, we need this, we need to reset expectations and valuations and start real growth, then,
I don't think that's ever going to happen. By the way, I don't think that's ever going to happen. I don't think
that's why
anyone
will be on the Weimar train.
But I think what I think, this is maybe a little bit of a bummer of a prediction, but like, no one's going to make that decision without cloud cover of something else happening. Like, you would need a bigger world event, right? Like bigger chaos and confusion. So when everyone's kind of focused on that, then you do this reset, right? Or something like that. But I don't think out of the blue, people are going to be like, hey, it's gone too far. We're going to reset. I just don't think anyone's going to make a decision like that. I think you need some way to summon the political will, like the catalyst.
Change only happens when there's enough pain.
Innovation happens one funeral at a time.
Yeah.
That's slightly
we
more
just
morbid.
Keep going with the quotes.
Yeah. Keep going with the quotes, baby. Keep going with the quotes. Yeah.
Not what happens, exactly. It's how you react. Okay, I'll stop.
Yeah, so God grant me that. No, that's too much. All right. All right. Last story here. Now, this is a little bit more technical than we usually get, but I feel like this is an important one to talk about, actually. So layer 1 wars are starting to heat up. And as evidence of that, so Ava Labs, they launched a $180 million DeFi incentive program. That's for their farming. Now, the reason I wanted to call this out is I started to hear some smart people talk about this in our space. There's a guy, Avi Fellman, who's, I forget, is a portfolio manager, head of trading or something over at Block Tower. He started to mention this. And basically, the narrative around smart contract platforms over the course of the last 6 to 9 months has been, it's all about layer 2, right? So that people have been really focused on EIP 1559 for Ethereum and then they say, oh, there's like Arbitrum and these scaling solutions sort of coming there, and everyone has kind of collectively forgot that there are actually competitor platforms, competitor smart contract platforms. Like if you look at what's going on with Solana, Luna, or Solana, Terra, Luna's the token. I mean, it's pretty incredible. I had a buddy of mine walk me through like 2 hours how to yield farm. Spoiler alert, I will not be yield farming. It's relatively complicated and pretty time intensive. But, you know, it was pretty unbelievable. Like his perspective was, you know, he's a big ETH bull, but at the same time, he was like walking me through how to do everything on like the Solana side of things. He was like, the product is just phenomenal, right? And honestly, transacting in Ethereum, like you see this all over the place now, but I had an experience where, you know, I'm just trying to move some money around and, you know, and I got thwacked, you know, with fees for doing it. And, you know, at a certain point, I'm like, I'm not really trying to make money here. I'm just trying to like, you know, mess around, but like, you know, come on, this is completely unreasonable. So I do just think that folks missed that there are, I think everyone just gave it to Ethereum that they won the layer one smart contract platform wars. By the way, Ethereum, a huge fan of Ethereum. I'm not saying that, I'm not advocating for any one particular platform here. I just think that this is an interesting dynamic to pay attention to. And if you're not looking at this in the space, I think you're missing something, basically. Because it's all about layer twos. And everyone just skipped over layer ones, but I think it's going to be a bigger and bigger thing moving forward.
You know what? I was reading Pomp's newsletter before that came out, and he said historically Bitcoin had a transaction rate of 7 transactions per second. Legacy solutions like Visa took 30 years to get to 40,000 transactions per second. Lightning has the ability to scale to 100,000 transactions per second. So like, even Bitcoin, you know, the Lightning network's taking off too. So,
yeah.
But not to
okay, sorry. I got to be honest about Lightning. I don't understand it at all, man. I don't understand.
It's really cheap, right? And you can do a lot of transactions.
But what? But like, I have no desire to spend Bitcoin. Why?
Yes.
All of the narrative, everything is about saving it. You know, you got all these guys, Sailor, right? We talked about it a million times. Doing that playbook, right? Like borrowing and depreciating fiat, using it to buy the Bitcoin. Yeah. Why, dude? Why would I want to be spending it? Why do I care about technology that helps me? Huh?
It's like the U.S. Treasury of the digital asset ecosystem.
Yeah, this is where I just really, man, look, I am so subscribed. I am so bought in. Full disclosure, I own a bunch of Bitcoin. I'm a big believer in it. But I'm like, I want stuff that helps me save in Bitcoin. I want the opposite. I want the opposite of what a lot of people are pushing. And even like, honestly, even hearing like Coinbase, you know, they're like, oh, you know, we've got these debit cards so you can spend your Bitcoin. It's like, why would I want to do that, dude? Yeah. I actively like buy it on a consistent basis so I can just hold it. I don't understand. I don't understand this. I really don't. But you know,
yeah, I think
I'm not trying to hate on anything. It's just like, this is one that's never made a lot of sense to me. It runs very counter to my internal narrative about why I care about Bitcoin.
But I mean, it's still impressive technology-wise. If Visa's doing 40,000 transactions per second and this is doing 100,000, like that's a net efficiency.
It is.
Game. Yeah,
totally.
So that's where I'm like, okay, if that can happen in Bitcoin, you know, where maybe a transactional currency, you know, in digital assets, that happens as well. So I don't know.
It's a really impressive project. Elizabeth Stark is a super impressive person. Honestly, of all the people that I hear talk in this space, literally anytime she talks, I listen because her knowledge of this, it's incredible. I don't know. Maybe I just don't get it.
What does Solana look like? Like, how is that so much different? Like the Solana ecosystem?
I mean, there's just a bunch. So basically, the way these systems kind of work is, right, you have like these layer ones that applications will like work on top of, right? So Uniswap it's a decentralized exchange that like primarily runs on ETH, right? So it's kind of hard to explain, but you're in that ETH ecosystem, and there are bridges and stuff that are opening up between like Avalanche, which is Ava Labs' protocol, and like Ethereum and stuff like that. But when you're just moving around in the Solana ecosystem, it's just much quicker and much cheaper, basically.
Yeah.
And I will say the counterpoint to this is there's a really great tweet. I think this was a Reddit thread, but this is the guy who tweeted it and basically talking about the Nakamoto coefficient, which is the minimum number of validators that can collude to shut down a network. So, and he lists all these chains here, right? So Avalanche is 26 need to collaborate, and that's out of a total of 1,001. Solana 18 need to collaborate out of a total of 849. Thorchain 10 out of 37. Binance Smart Chain 7 out of 20. Terra, it's 7 out of 130. And the list goes on and on. For Polygon, it's literally 2 out of 100. So, he's interested. He said, why no data for Ethereum? You might find sources that say that ETH2 has over 200,000 validators, far more than any other network. However, this is misleading because basically each validator just represents a 32 ETH deposit. So it's a little bit more complicated for ETH. I think ETH is no one's saying that that's not secure. Although I guess there was a split today, which, to be honest, don't know what that means. So I guess we'll see what's good there.
Yeah. Price doesn't move it.
Doesn't seem to mind, does it? No, it does not. So I guess overall, the criticism, right, that you're basically, like a lot of smart people have said this in the beginning, you make design choices with this stuff. You can't have it all, right? So if you want that decentralization, I'm more comfortable with ETH because I feel like the decentralization gives a level of security that I just appreciate with this stuff. But that being said, it's cumbersome to work in that ecosystem now compared to something like Solana. And maybe one of these layer ones ends up getting, seriously disrupted. If there's a successful attack on it, maybe we'll feel differently, but it's worth looking into. It's just a development that I think is worth flagging.
Yeah.
Basically. Yeah. And if anyone out there isn't yield farming, what a crazy world that is. Absolutely wild. Wild. So last thing I think that's kind of interesting to point out here, taking a big departure. So talking a little bit about the Taliban. So the Taliban tried to get their hands on the Afghan central bank's nearly $10 billion in reserves, but most of that money is in New York. And guess what? They might not be able to get it. So, this is I think a lot of these issues are really interesting because they do tend to play out on the fringes. I'm not sitting here saying it's a travesty that the Taliban can't get access to funds, right? I'm not, but it is interesting, right? That someone has the power, and you better believe that when they can't get access to those funds, other countries are being like, that's a possibility for me, right? They're looking at that saying, that could happen to me. And interestingly too, this OnlyFans thing, this story that you begged to talk about in last week's roundup, it got reversed, and they're bringing explicit content back onto the platform. And guys, you can thank Tyler. Tyler told me he made at least 50 calls to his senator complaining about this.
You got to throw me under the bus in my life.
I'm sorry, buddy. I'm sorry. I'm
just messing with
you. But no, I mean, these are all like. What's interesting is that, however this happens, be it by design or whatever, a lot of these power struggles do tend to first get manifested on the fringes and around actors who you don't necessarily have a lot of sympathy for, right? So it's guns, or it's tobacco, or it's payday lending, or it's porn, or it's the freaking Taliban, and nobody's going to cry for them. But these are important issues, and they show you where power is really located.
Well, the internet, I think they're kind of like built off porn in general. Like,
still is 30% of the traffic, by the way.
I mean, that's the craziest thing. So like, it's the stuff that no one wants to talk about, which is like this type of stuff, and that tends to play out, like you said. Like you got to pay attention to this stuff for the future. So even though no one talks about it,
I agree. Yeah, I agree. All right, man. Well, that about wraps it up for the show. All right,
bud.
Final one. Gonna miss you, buddy. Gonna miss you. Wish the best for you, though.
Jake Paul, Tyrone Woodley fight on Sunday. What?
Is this? I didn't know that was happening. Dude,
I
didn't get your sports reference before.
We're watching Rome. This is Rome. This is like the circus. Like
Oh, I thought you were actually talking about.
social media fighting. Like basically, it's this like Jake Paul's this like YouTube star. This social
Yeah,
media.
I know Jake Paul. I've like seen the highlights of his fights. I get him and Logan Paul mixed up. They're brothers?
They're brothers,
right?
but like
Okay.
you should be teaching me this, being older millennial. But anyway, so I think
I can't believe you almost called me Gen Z.
this watching these stupid fights happen. I mean, like we watched Floyd Mayweather fight Logan Paul like a month or two ago, and now Jake Paul is fighting Tyrone Woodley, who's an MMA fighter, and I'm like, this is exactly what Rome did. Like, it's just crazy, circuses,
Coliseums, bread and circuses, baby. Bread and circuses.
That's what it is. It's what it is. Keep it.
That being said, I watched the Manny Pacquiao Floyd Mayweather fight like 6 years ago or 5 years ago.
That was
brutal.
Good. Yeah.
No, dude, it was awful. It was like going like this, and they're hugging, and it's like, come on, punch them, punch him.
Form.
See that? A little bit of that? Ooh, yeah, loose, baby. Yeah. Roy Jones Jr. in here. Have you ever watched Roy Jones Jr., his highlights?
Oh, yeah.
Oh, man. If you ever want to watch like a swaggy boxer, Roy Jones Jr. is he's a favorite of all time.
He was something else, yeah.
He'll like put his hands behind his back and then dodge with his head. It's like...
Yeah.
That's operating at a different level.
I actually watched him fight Mike Tyson when Mike Tyson did the comeback. It was like a couple months ago.
No way.
It was pretty sad watching those two.
Oh, really? Oh, God.
Like, oh, my God. I still have this picture of Mike Tyson being like this like animal and Roy Jones Jr. being this like fast, quick. And they were both just slow as paint trying to like stay in the ring.
Let me ask you, Mike Tyson in his prime, how much would you have to get paid to get punched in the face by Mike Tyson?
Oh.
Keeping in mind that you
would I get
literally
my
die.
hands up? Would like I have to
No. You have to go like this.
On?
Yeah, straight punch to the face.
I don't know. Probably $1 billion. He'd probably kill me.
I was gonna say, I think I could die. Yeah, I think he could literally kill me.
Like if you gave me if you just hit me like right here, just turn my lights out, then I'd be okay. But I don't want to mess up the moneymaker, bro. This nose, come on,
a moneymaker. Yeah, okay, buddy. Yeah, all right. I mean, I had the same thought as you. I was like, you watch these old fights of him, and it's like, what would my face look like post a Mike Tyson punch?
Oh God, yeah.
I have no idea. I'm not built to withstand that. I am not built to withstand.
You're a lover.
I'm a lover, not a fighter. Yeah, I'm a lover, not a fighter, baby.
By the way, great action photos of Mike from Bretton Woods golfing. Yeah, out there.
It's like one of the better photos I think ever taken. I mean, I'm proud of that photo. Yeah, so
like
go on.
Cover of some real WASP magazine, like Greenwich Weekly.
Dude, Greenwich Weekly, that's the dream. That's the dream. Greenwich, yeah, I know, with the like the backswing, the club. Oh my God. Greenwich Weekly. Yeah, I know. Well, a boy can dream. All right, Tyler. It's been real, my friend. I'm sure we're gonna have you back on here at some point. And everyone stay tuned. Got a new co-host coming at you next week. No one can replace Tyler, but going to be pretty cool too. So
I think you're going to be in good hands, better hands. You'll learn way more from this new guest than me. Yeah. But I have a better sense of humor. Yeah.
Yeah, and you got the moneymaker. It's unmessed up by Mike Tyson.
All right, man. Catch you.
All right, buddy. Take care.